as for today's session, my focus will be on how do you analyze your charts and make sure that you have most of the odds on your favor. Because when you trade every strategy, guys, what matters is that strategy. Before you can execute a trade, you have to be at least 60% or more believing on that position that you are entering. The reason being, if you enter that position, whether the market sharply moves in the opposite direction, you will be still confident that your analysis was correct. And with that in mind, you're going to wait. You're going to be patient with your trades, okay? Because trades, guys, they need time to play out, okay? If you want to take trading as a long-term career, you have to know that when you open a trade, they have to breathe. They have to take time, okay? And as they take time, that means they will go on to negative first before they go into losses. All right. And most of you, I guess you are aware, even when you are scalping, immediately when you open a trade, it always starts on a negative. Why? Because by the moment you open a trade, the broker, it have to make sure, it have to give you a price feed. Thus, they charge you their commissions or their fees. That is why most of the time when you start any trade, you might find that it starts on negative. All right. So when it starts on negative, let that not worry you. Okay. If you get worried, you have to stop trading and focus on refining your strategy, because that is a sign of you not knowing what to look for in the market. Okay. Remember, you trade a strategy. A strategy is a set of rules that will help you not to lose or minimizes your losses. Okay. If you don't have a strategy to trade, you are gambling, and gambling over a period of time, they lose money. All right. So for you guys likely to be on this session is, I want to tell you that learn the strategy first and then apply it to the latter, meaning you follow the strategy exactly the way it wants you, it been set out. Why? Because the person who created that strategy, they practiced thousands of times and they figured out that actually that strategy works. That is why they created it, and they said, no, I have this strategy that I can teach you. So the same thing with the strategy that I've been teaching you guys. What I want each one of you to do is learn it, master it, and apply it to the latter. All right. If you don't have any strategy, don't trade. Okay. All right. So yeah, I'm going to show you something on the charts here. Usually when you trade, you have to choose. When you trade, you have to choose. Let me show you. One, you have to choose 3 time frames. Okay. Example, time frame combos. Time frame combos. You can choose You can choose monthly, weekly, daily, okay? Or you can choose H4, H1, M30, which is the 30 minutes time frame, or you can choose, somebody didn't mute his mic there, or you can choose, that is H4, H1, M30, or it could be M15, M5, M1, all right? These are the three combos that you can choose when you are trading, guys. Okay, don't mix them. You only choose 3 different time frames, and then you execute your positions based exactly on that. All right. So if you are choosing the monthly, weekly, daily combo, forget about what is happening on this on H4, H1, and H 30 minutes. All right. If you are choosing M15, M5, and M1, forget what is happening on this top time frames. Why? Because when you do that, guys, you're going to do something we call over analyzing. You're going to over analyze the market, and with that you're going to get more confused. All right, pick 3 time frames, and then you open your positions based on that. One, now I watch here. The first time frame, the first time frame on your combo is what we say, it gives you the bigger, it's a bigger time frame. TM for time frame is the bigger time frame, and you use that for direction. Okay, you use that what first, the bigger one for direction. 2, which is the middle time frame, you use it for confirmation. Okay, and then the third one, that is where you execute. That is where you execute your trades, or that is where you enter your trades. Okay, this one, the bigger one, it determines, let's say example on this combo, if you're to choose monthly, here the monthly time frame will be the one that I'll be using to determine the direction. I get it. And then confirmation on daily. Okay, and on H4, that is where I'll open my trades, or I'll do my my buy orders, set my limit orders, and the likes. Okay, this is very important. It helps you not to over analyze. Okay, so now check here on this pair. On this pair here, okay, before I go there, let me show you what's very important for you here. Okay. Let me clear this. Okay. So before you open those positions, you check this. I got it. First, the direction. I got it. In this time on the monthly, time frame. Okay. The direction, it means here you check if the pair you are trading is bullish, bearish, or consolidating. Sometimes you can say, oh, it's ranging. Okay. All right. And on the daily, here you check the broken areas. Broken areas. Here it could be demand or supply. This is where you check for those areas that were broken or they were violated. Because why? When the market moves, it have to create support and resistance, demand and supply. And the market moves between two demands or two supplies. There will always be a supply that is controlling and a demand that is controlling. The market moves from one supply to the next, Okay. Okay. When the market actually moves, let's say on the bullish scenarios, the market will be printing out the demand areas that helps you to enter your trades. I get it. So now, on the daily time frame, this is where you check if is there any supply or is there any demand areas that were broken? Is there any demand supply areas that were printed? I get it. That can allow you to enter those trades, right? Or you check if there any demand area, is there any demand or is there any supply that is near? I get it. Because if example, if the market were on a bullish mode and you find that now that the market is near a certain supply area, automatically it's a sign that tells you that no, don't buy on that area because there's a high possibility that the market will reverse there. I get it. And then on H4 here, you enter trades, okay? And entering trades, you don't just enter, you enter looking at nice setups, which are still demand and supply areas, okay? So that is very key and very important, okay? So now I'm going to show you on a chart, how am I going to use a monthly combo. I get it. Let's look at this chart here, okay? The first thing first, what do? You draw, do this. Which one is a valid trend line here? It's here. Like drop, base, rally, drop, base, rally. Which means this pair on the monthly, it's doing what? It's rallying, meaning it's bullish. I get it. That is the trend line, right? And after that, we have to draw another trend line. I get it. This one is a bullish trend line, and the other previous one was this one, which after that it was updated. I get it. And then after this also, you have to make sure you draw the latest bearish trend line. Okay, like here, rally, base, drop, rally, base, drop, which means the valid area on this pair, which I'll say it's a proper strong area, was here. Let me draw this. It's here. Okay, and this area, guys, it's what it's called a supply. No, a demand. It's a demand because when you pick or the valleys, on the valleys, anything that you draw on the V's, those are demand. I get it. So the inverted V's, okay, you draw supplies. I get it. So which means when this pair was going up, it was printing this nice demand areas. A demand here. I get it. Look here, another demand area here, and this area, though it's a weak area. Okay, and now when you are done with this one, now you are sure you know where the market is. I get it. So you go on the weekly. On the weekly time frame, you do the same thing. You draw the latest what? Valleys and peaks connecting the latest trend line. Look, there was a trend line here, which immediately when it was broken, okay, check. This trend line was broken by this candle, and after that, the market did what? Rallied, meaning the market went up. Okay, look. So which means still on this pair, we are still going up. I get it. And then when you go on your daily, for here still can even draw. There is no possibility of drawing a bullish. Oh no, it's here. Rally. Oh, it's here. It's here. Okay. If you go on the daily time frame, let's check. I have. Latest trend lines. Where are they? Here. We have drop. Another one drop here. It's here. That is the bearish trend line. The bullish one is like this. Okay. Y, V, drop, rally, base, rally, drop, rally. It made a high just here. So what happens? As it goes up, it will print the entry points where you can enter for your positions. All right. So now, when now you are here, one, you know what? That this pair, it's rallying, meaning it's going up. It's been going up. Even if you were to check previously on the monthly, we had areas here, I get it, which were broken, right? And Mm-hmm. Yeah, they're going up there. And as it was going up, the strongest demand on the monthly is the demand here. I'm going to color it maybe this color, deep blue. On the monthly, this is our strongest demand. Why is it area? Why this area is strong? This area is strong because of this. It's broke. It's managed to break this high, and then again it broke this areas here. Okay, look, 1, 2, 3, 4. This candle, it took out 4 resistant areas. These areas were stubborn. Like, let's check. Market went there, touched, bounced, went there again, touched, bounced, went there again, touched, bounced. And guess what happens? On the 5th try, the market broke the area. That on its own, it means this area, it is where there is strong demand, meaning we have lots of institutional traders waiting here to enter their positions, right? So in short, on the lower time frames, we're going to enter our trade here on that area. Okay, let me clear that. Check on the weekly again. Which area is this? Let me just make this small. On the weekly, which area is this? Is there? Again, I get it. So drop, base, that. So in short, we have a nice, a possible entry. It's here. Okay, on the weekly. Okay, so this area, let me show you this area. There. Okay, and as it stands, you can do something called shorting. You can short the market, meaning you can sell, right? Why? Because this price here, this pair, as it stands, it was oversold. Why do you determine oversold? Oversold, whenever you see a pair printing this big ERC, like 1, 2, 3, when a pair prints more than 3 ERC candles, these long candles, it gets oversold. When it gets oversold, it means there is a high possibility that it might reverse. I get it. So another supply there and supply here. So meaning there's an area here, another area there. I get it. You're on the weekly. So if you go further down to daily, On the daily, let's check. Let's check. On the daily, we do have this area that this was area number 1. Okay, which the market is still waiting to break it up. But why this area was valid, why immediately when the market came here, it dropped like at this candle. This reaction, it was a sign to tell you that there was a supply there, meaning some people took positions on those 50% candles, on those candles. I get it. And then it dropped. On the second chance here, I'm expecting price to break this area, and for me, I'm waiting for a trade here. Here. This is my area of interest. Okay. So I'm expecting price for when it comes here to reverse. Okay. And go down. It will go down. I'm shorting it. It will go down to, let me show the area where I'm expecting it to go down to. I'm expecting it to go down here. Where's the arrows? Okay. Here. And then it will go here, right? That is where I'm expecting price to be. Okay. So that's where I'll put my sell limit. And it is still the valid area even on the daily. Yeah, this area, because it's a super nice supply there. Okay. Yeah, is that for that pair? So when you trade, I'll repeat this again. Maybe let me do another pair. Let's look at this pair. Maybe for here, we can even here, we can choose a different combo. Let's say our combo will be H4, H4, H1, M30 or 30 minutes time frame. On the H4, our current trend line is like this. Okay. That is our bullish trend line. And the bearish one is like this. Okay. meaning here we have demand, another demand, and the CP here. Remember, a CP, we said it stands for continuous pattern. This pattern, most of the time, after it's printed, it continues the move to the upside or to the downside if it's printed on the downside, right? And when you look on the history, when you look this side, you might find that there was an area here which was broken on H4. I get it. For some of you, they will say there was a support there. Yeah, can call it support. But for me, I'll say there was a supply there which was taken out. And it was taken out by this continuous pattern. All right. So usually, if you haven't entered any trade, when you get on this area, you don't open positions. I get it. You have to wait to see what happens. Okay. So which means when you look at this pattern as it stands now, the area of interest, the strong area is this one. Why am I saying is this one? Because this area, it took out, let me check this. Yeah, it took out a demand here. Okay, maybe let me annotate with this one. Okay, it took out demand one, I mean, yeah, supply one, supply two, and yeah, one, two is broken that out, right? Meaning this formation, it was super strong. Okay, so depending on the broker that you use, you might find that for people, if you are trading this, you already on this position. Why? When you look at this candle, like it dropped to here, because usually I said when you set and buy limit, what do? You add extra 10 pips. Okay, so that you can avoid being left out on your positions. Okay, here. And what happened? Went up, down, tested this area, and I expect to do what? For price to, I expect price to and go up. Okay, yeah. So what you guys have to understand is this. This is very, what is very important for you to understand is this. Though I'm saying that is what I'm expecting price to do, it's possible that price can break this area. All right. So if you set your buy order here, example, you set your stop loss somewhere there. I get it. When it breaks this area, what do? Yeah, you get out of that trade and then you wait on the next one, on the next demand. I get it. So when it breaks the second demand, look, when it breaks the actually, if it can happen, that price will break this area. It is actually telling you something else. Why? Because there is a nice trend line here. If it's broken, what does it mean? It means the market is changing direction. When the market is changing direction, what do? You find the entry positions, the entry points to go down as the market will be changing direction. I get it. But what I guarantee you is if it breaks this area here, if the market breaks this area, I'm expecting price to come and reach this area. So which means if this area is broken, what do? You find a position to enter going down. That's how simply it is. Yeah, it can, what it can do, it can touch this area and go up. Okay. So let me check, let me show you here. When you go on the H4, now remember we're doing how many? 3 times frames. I get it. On the H1, we do the same. Our trend line, is it still intact? Yes, our trend line is still intact. It's not broken. I get it. So rally here. Okay. M30, 30 minutes. On a 30 minutes time frame, the same thing. Our trend line is still intact. And usually 30 minutes time frames, guys, they are for people who do scrambling, okay? Who scrambles. Or you can say, sorry, people who do scalping. If you scalp, what happens is 30 minutes time frames, you get in a trade, and before the end of the day, you should be out from that trade, right? If you enter on a daily time frame, expectation is to hold that trade for days. I get it. When you enter using 30 minutes, the expectation is for you to hold that trade for more 30, for maybe 2 or 3 30 minutes. I get it. Yeah, that's what it means. And also, you move your stop losses based on that or on what is happening on that time frame. So 30 minutes. On a 30 minutes time frame, we actually do have here we have this. Okay, that is our latest trend line in 30 minutes, right? And again on 30 minutes, our latest trend line is this one. Okay, meaning 30 minutes timeline here, this trade is broken. And now the issue for here will be to enter here. This area, you can say it's your supply. I get it. But now the issue with this area is that it's been tested countless times, like 1, 2, right? Meaning, if you are a consecutive trader, you will wait for something we call confirmation. So in this scenario, a confirmation will mean you'll have to wait for this pair to do this first, because it's either it breaks this. When it breaks this, you know that you enter your positions here, here, here. Okay. If it breaks down, which means it will be breaking this area. Okay, which it means you can expect it to go further. Let me show you on the H4. That means if it breaks this, it will have broken the H4 trend line. Breaking the H4 trend line, in short, it will mean we are going down to this area. Okay. Yeah, let me clear this up. Clear this out. Yeah, let me draw something for you here. Okay. So when you trade, guys, right? You have to look for those patterns. I get high odd patterns, but they have high odds of performing. I get, or sometimes it could be like this. Like this. Okay. These boxes are you drawing your demand. I get. So what you need to do? You spot these patterns. A pattern like this for demand. Most of the one is like that to be for supply. Yeah, same thing. Yeah, like I was saying here, rally, base, demand. Okay. Same thing here, drop, base, was supply. Okay. Look furthermore. Look here again. Rally, base, test market reverse tested, went up. Okay, here rally, base, rally. Again, same thing. Drop, base, drop, rally, base, rally. Okay, continuous patterns. I get that move. It's a super strong move. Drop, base, drop. Again, drop, base, drop. Again, look, drop, base, drop. Same thing, drop, base, or it pauses and continues. Same thing here, dropped, pauses, it continued. Dropped, dropped, pause, continued the move. Dropped, pause, continued. So this is key, guys. When you look at the charts, you'll always spot this. The more you look onto the charts, the simpler it will be for you to spot them. Okay? Yeah. Trend lines with combination of these patterns, guys, it will be more good for you, and you'll be trading something that you know you are doing. Okay, I'm showing you this so that whenever you open a position, you know what you have to look for, and you know what you are doing. You are not just opening based on one candle that is long, like, oh, this thing is going up, and then you follow in. You know, I get it. You trade what you know. You trade what you know. Okay. Yeah. Look at that, guys. These patterns, they continue the move. Okay. So what I wanted to emphasize with you guys for today was that that please notice those patterns and utilize trend lines. A trend line, when it's broken, most of the time the pairs, they change the directions. The market will change the directions. Okay, that on its own, trending a trend line, that on its own, guys, it's a strategy. There are people who trade only trend lines. When it's broken, they enter their positions. The same thing, you can do it too. You can do it. And how do you do it? At first, if you are still new, you practice on the chart. Okay. Yeah, on shorts. That is what I wanted to share with you guys for today. So stay safe, everyone, and have a good weekend. Not weekend, have a good week, as there are holidays coming. So learn, it's a time for you to learn the charts, practice. And like the saying as it goes like this, practice makes perfect. For me, I always say a perfect practice is the one that makes you perfect. Okay. So, and always if you are struggling somewhere there, guys, please feel free to ask. Okay, I'm just giving you this for free. Utilize it. Okay, because what I realize, most people, they will start to want to learn somebody's strategy after they've seen that that person is making money. I'm not going to show you my account. Why? Because I spent sleepless nights learning on my own. I get it. I was motivating myself. I was learning because I had a why I have to be a successful trader. There was a reason that made me not to sleep. Like I'll consume as much information out there, okay, until I become a successful trader. So the same thing with you. I'm doing this as giving back to the community, as giving back to people who are willing to learn something new. Okay. But I tell you, the day I show you guys my account, that is the day that I'll stop sharing this knowledge for free. Okay. Yeah, because I know some people, they need proof to see that, oh, indeed, this thing is working. And then after that, it's like, no, it's working. That guy, no. Okay. Yeah. So maybe on a good day, I'll show you my account. And if that happens, I'll start taking sessions. I wouldn't be doing free sessions. I'll be charging for sessions. Okay. All right. With that, in short, that's the end of our today's session. Thank you, guys. Cheers.